I just wanna make you mine.
Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be an update on bank statement loans. I just got some new guidelines from one of my favorite wholesalers that we sell quite a bit of loans to. So we're gonna go ahead and go through what the updated bank statement loans is. So what is a bank statement loan? A bank statement loan is just somebody who, you know, you don't have that much money in your tax, showed on your taxes, and you know, you don't really have, like, let's say you're a self-employed person and you write off a lot of your taxes. So what we do is we go ahead and take your total bank statements, your last 12 months worth of bank statements. In essence, we're gonna go ahead and take the total amount of deposits. We're gonna go ahead and take the total amount of debits. We're gonna go ahead and take a 50% ratio calculator on that. And then we're gonna go ahead and get you approved just purely based off your bank statements. Nothing else, nothing more. So let's go ahead and get on with this and see exactly what the bank statement loan is. So the bank statement loan is actually going to be a 30-year fixed rate mortgage. This is going to be a non-qualified mortgage. This will be for a purchase, this will be for a refi, and this will be for a refi cash out if you need it. This will be for self-employed borrowers only, because I mean, obviously it'll be mostly for self-employed person, because if you're a W-2, you're not going to really need a bank statement loan, because you know, Uncle Sam is already, he has his hands down your pockets already. We don't need to go ahead and take anything else into consideration. What we would need is a letter from your CPA. We will need a letter from your CPA that, you know, states that, you know, you are a self-employed person, so your CPA will know what they're doing. Don't worry about all that stuff. The details, especially the self-employed part, you don't need to worry about too much of this. I'll go ahead, and if I am your mortgage broker, and of course you can go to anybody, but I am a mortgage broker, and if you do need any of these mortgaging products that I have listed all throughout this little YouTube video, not this specific one, like the whole channel. Okay. But if you did need any assistance, go ahead, link in the description below. But you will need a letter from your CPA that states that you are actually self-employed and that you own at least 25% of the business that you are trying to go ahead and get qualified for. This will be a minimum FICO score of 640, but try to get a little higher. If you need assistance with trying to get your credit up, just let me know. We work with a bunch of people that fix credits. If it's something simple, I'll be more than happy to do it for myself, free of charge. Don't even worry about it. But if it's something that is a little bit more, you know, to get yourself up with your credit score, and you need way more help than what I could provide, we have people that could go ahead and help you, or you could just go ahead and scour or credit repair anybody in your local area that could go ahead and help you with that. Now the maximum loan to value on this is going to be 90%, which is great because it's only a 10% down product, right? You could only do 10%, which is better than most of the putting down 20 or putting down the other, whatever else it is. The debt to income on this is going to be 43%. So that means that you take your total debt, you take the total amount that you have coming in, and we could do 43%. So let's say hypothetically that you brought in $100,000, and then $50,000 of it went to whatever it is, the cost of running your business. So your total balance on your bank statements is $50,000. Well, we could use to qualify that 40. Easy enough, right? Not too bad, not too shabby. Now, like I said, this is a non-QM product, a non-qualified mortgage product, and then it was essentially a non-qualified mortgage product. It's not a bad thing. It just means that it doesn't fall under the guidelines of Fannie Mae or Freddie Mac. That's it. These are the two biggest corporations that, you know, insure these mortgage-backed securities, and they're not one of them. Like I said before, we are going to need a minimum of 12-month bank statements. Maximum loan amount. The maximum loan amount, which is actually pretty hefty. It's not too shabby. It's $3 million. You're balling out. You have, like, you know, you're just doing your thing. $3 million is your maximum loan to value. On the second, now just a FYI, if we are going to that $3 million, anything over $1.5 million, right? So if we are going above $1.5 million, because, you know, that's a ton of money for a house. Huge. You know, it's a lot of risk involved into it. It is not going to be a one appraisal done and deal thing. This will be a two appraisal type of scenario. Okay, so we're going to go ahead and dump one, and then we're going to have one follow-up to go ahead and make sure that the first guy didn't, you know, he wasn't doing an appraisal like this, and he was just like, yeah, you know, whatever, he did it at home, and he just click, which, by the way, appraisers are now going to be able to go ahead and do appraisals from home. Don't know how that's gonna work. As soon as I figure that out, I will make sure that I go ahead and update video on that, because I don't know how the hell that's going to happen. So the next part of it is going to be the income calculations. How are we going to calculate this? So the average business account transfers into the personal account over the duration provided. We're gonna be just looking for any, salary type of things to make sure you are in fact self-employed. And then if you do have, like, let's say this crazy like high deposits 1 month and you don't have it another month, these are things that we are going to have to explain. And when we do that, before we go ahead and I will go ahead and take a look at your total statements. I will go ahead and see what the flaws are here and what we will go ahead and need to explain to underwriter, which we will, before we go ahead and submit to underwriting, we will have to do something that's called a letter of explanation. So let's say, for instance, I don't know, you just killed it 1 month and you have like 100 grand, you have 100 grand deposit. Well, we're gonna probably have to explain it if you're doing like $15,000, $20,000 every single month beforehand, which we'll go ahead and take care of when we go ahead and get there. Now, there is something that is called CoMingling, okay? So a majority of people, whenever you have a business account, which by all means, if you have a business account, just keep your business to your business and your personal to your business, personal, or better yet, just take all the money that you have, go get yourself an Amex or something like that, and just take the money and just dump it into your credit card. The money's still gonna be there. It's not gonna go anywhere, but we have this thing that's called CoMingling. If you have your money going into your business account and your business account going into your personal account, we will need at least 2 months worth of statements from both accounts to make sure that there is no commingling. So the amount that you are taking out to your personal, it's nothing more than what it is supposed to be for the business account, right? So, the business profits have to stay there, and then yours, depending on how you get paid. Now, when it comes to these bank statement loans and businesses, right, everybody decides that they want to pay themselves in a different way, whether you're a sole prop or you're a C Corp or you're a S Corp, a limited liability in conjunction with one of the other corps. And let's say, for instance, you are going to go ahead and pay yourself out, however that you decide that you want to go ahead and pay yourself out with, if you're just going to use, credit from the business account. So just take this whole entire video as a very, very broad spectrum of exactly the qualifications for this, and don't take it like, super detailed. That's my job. Let me go ahead and do that, and I'll go ahead and take care of that. And for instance, if we do end up finding out that there is some sort of commingling, if funds have been commingled, where we're gonna go ahead and take business and personal and business, and we're mixing those two guys up, they're just doing that thing together, we are gonna have to do something that is called a bank statement analysis. It's not a big deal. I just toss it out there. You really don't need to know what it is. We just have to go ahead and figure out on our end. But if you are curious exactly what a business bank statement analysis is that we just go ahead and use our own formula instead of your CPA's formula to go ahead and see exactly what your total expense ratio is. Our expense ratio is just gonna be at 50%. Pretty standard. That's all it's going to be. We're just going to go ahead and do it all on our own. We're not going to take your CPA's word for it, because we could always get a letter that says, if you're not at 50%, your expense ratio just means that your expenses are not exceeding the 50% threshold. Then if they're like, we're actually at 60%, if we find out that there might be some commingling, then we're just going to go ahead and stick to the 50% expense ratio, and that's how we go ahead and qualify you. And like stated before, the additional documents that are required, of course, we're going to have a lot of talks with your CPA. So your CPA is going to be a crucial part of this whole entire program, okay? So they better be available for us to call them at any time. Hopefully we don't have to call them too much. That's why I'm putting out this video, so that we're going to go ahead and ask a lot of this stuff up front from him or her, whoever is your CPA, and we just need to verify that you have A, been in business for at least 2 years, and then B, that you actually own at least 25% of the business in order to go ahead and qualify you. Now we have this other thing that's called reserves. What is a reserve? A reserve is just something that is set into your bank account excluding the down payment and any closing costs that you might have. So what is a reserve? Reserve is going to be your principal, taxes, and insurance, principal, interest, tax, and insurance, your PITI, that is going to be at least 12 months. So let's say for instance, if you go ahead and we get you approved on this bank statement loan, then what we'll go ahead and do is we're going to calculate how much money you have for down payment, and we're going to do that with your bank statements. Then excluding that, we're going to need at least, so let's say for instance you have $3,000 a month with your principal, tax, interest, tax, and insurance. We need to see separated excluding the total down payment and closing costs that you might pay, that you have that in reserve. That's like a cushion, a barrier that's going to go ahead and, like I said, protect this loan. It's called risk mitigation, that says that, okay, I have 12 months worth, we're going to need at least 12 months worth of reserves in that account to go ahead and, you know, just in case, you never know, shit might just hit the fan and we need an extra couple of months, and it actually is benefit to you, right? Like, let's say for instance something bad happens, you have that little bit in your bank account to go ahead and cover your costs just in case that you might need it. So there's a few rules to this bank statement loan, and then there's a few exclusions to it. Okay, the first one is going to be there will be no first time home buyers on investment properties. So if you want to do it for your personal, cool, you can do it for your first time, but if you want to do it for an investment property, you have to be some sort of seasoned investor in order for you to qualify for this loan product. There is no mortgage insurance required on this loan. So that's awesome, right? That's great. You don't need any mortgage insurance. What's mortgage insurance? That's like, you know, because you're putting a lesser down payment than the 20% that is typically needed. You don't need to worry about mortgage insurance. No appraisal waivers. That means that no matter what, we will always have to do an appraisal on this property. That's one of the downsides. We don't get appraisal waivers on this. No matter how much the property is worth, no matter what the loan to value is, we're gonna go ahead and manufactured homes, they are not permitted. We cannot use manufactured homes. Manual underwriting. So there's going to be, whenever we go ahead and pre-approve people, what we do is we go ahead and fill out something that's called a 1003. A 1003 is your standard mortgage application, and then once we go ahead and get all your debts, your incomes, we run your credit. Then what we do is we have a separate credit agency that goes ahead and does, it like combines everything and makes sure everything that we put in falls under the guidelines of that loan product that we're going to go ahead and put. So it's called an automated underwriting system. We don't have that on this one because obviously we wouldn't, because it's a bank statement. Now a lot of you guys are probably like wondering, you could probably charge me an arm and a leg for this. No, we can't. There is something that's called an HPML, which lets us know if the fees are too high. If it fails over 3%, so if we go on fees, on total fees over 3% total, that's called with origination, tax, title, everything, then it will not allow us to go ahead and get this one approved. But there is a couple of places that this is not allowed. So all you West Virginia people and you Texas people, my apologies. I'm so sorry. Not sure why we're not allowed to do it there. I have no idea. I am just the guy who brokers these loans. They don't allow it. Whatever. There's other loan products for you Texans and you West Virginians. West Virginia, is that what you say? Whatever. And then we're gonna go to the cash out. Like I said before, you can do a cash out refinance on this. The max cash out that you could do is $500,000 on this specific bank statement loan program. Now the only reason why I go with this specific wholesaler is because I just like them. They're cool. The CEO of the company, he's a nice guy. I've talked to him. He's they have great pricing. Their system to operate is really, really good. I like them. Can you go higher? Yes, of course. We could actually go up to $1.5 million. Not a big deal if we really, really needed to with other wholesalers. But as far as this loan program, this is my updated one. I only do this because I really personally like this one. And if you really, really want to know who it is, it's a company called United Wholesale Mortgage. Just like them. And then the last two parts of this is going to be have you been late on your mortgage if you do have a house in the last 30 days? If you don't have it and if you're renting, we'll do a verification of rent. Make sure that you haven't been late in the last 12 months. And that's it. So we want to make sure you're not really late on your rent for the last 12 months, or if you have a house already and you're trying to sell it and you're doing whatever it is, or you want to go ahead and get a second one, we just got to make sure you haven't been late on that for the past 12 months. So in all essence, it's actually a pretty simple program. It's not too crazy. Actually really, really beneficial to people who actually use their bank statements for majority of things where you have a lot of big deposits. So if you like the content, if you liked it, if you want to go ahead and pre-approved on the bank statement loan or any other loan out there, because let's just face it, I am one of those guys who do it. Big banks don't really do too much of these non-qualified mortgages. I honestly don't know of any of them. So if you do need one of these products that are not really listed on the Fannie Mae and Freddie Mac products, if your big bank does, and even if it is your big bank, allow me to beat your big bank for up to 50% commission rebate, 0% listing on selling your current home, and any mortgaging assistance, link in the description below. Let me help you out, or what? Yeah, let's be friends. Till next video, guys, I really appreciate you guys watching. Hit that like, subscribe, comment if you hate it, if you liked it, whatever it is that you want to do. Link in the description below. Till next video, guys, thank you for watching. And then I promise you, I just really enjoyed the weather today. I'm going to be back in that little studio of mine, but cut me some slack, let me get some fresh air once in a while. Till next video, guys, thank you for watching.